Good morning, everyone. Hello, welcome. Good morning. Hello. How is everyone doing? I hope you're all doing very well. Right, I'm gonna set up things here for you guys. Let me fix everything, the Zoom. I'll fix the charts a little bit. I'm gonna observe what's going on. Let's have a look. Right, I'm gonna give some time for the others to join us as well. Good morning. Happy to be here. Happy to see you here. Good morning, everyone. Good morning, good afternoon, good evening, wherever you are. I don't know where exactly you are in the world, so I salute you. Greetings. Welcome to another live session. We're going to have a look on the charts and see what's going on with Bitcoin and talk a little bit about TA, and also we'll talk about how you guys doing and how you, if you have any questions, you have any trouble around the school, how to do the TA and stuff like that. We're gonna, talk about it. I'll try to make things easy for you. Sometimes, I know the lessons are good, but sometimes you may have some questions, maybe you're not confident, maybe you're not sure exactly how to use many tools, stuff like that. I'm here for that. I always have music on the background. It is not my language, so I do not focus on the lyrics, so I don't get distracted. It's a nice, cool, low beat, music, it's keeping the mood up. So, Tuesday today, happy days everyone. Okay, how many of us are here? Not too bad, 12 people. Hello Jane, I see Jane here as well. Hello everyone.
Good morning. Good morning. Looking forward to this meeting this morning.
Haha. Thank you.
Yeah,
Thank you.
That. Okay.
How you doing? You all right?
Yeah, I'm fine, thank you. Yeah.
That's good. That's good.
Yes. Yeah. Looking forward to this today, I must admit. Okay.
Okay, cool.
I'll let you carry on.
No worries. This is a two-way thing, right? I'm not going to be always the one talking here. So if you have any questions, please raise your hand. If you don't want to, if you're a bit shy, then you can text me, right on the chat. And you're more than welcome. Don't be shy. This is a dialogue. All right, okay, I think it's time to start. It's 8 minutes past. Whoever made it, we made it. The session is going to be open. They can join at any time. But it is not fair for you to wait for any time longer. So let's have a look what is going on Bitcoin. I'm gonna turn down a little bit of music down, so I don't want to be distracting you. It's gonna be staying there in the background just to kill the silence. Right, okay. This is Bitcoin. Currently, we are sitting at 63,003. We had nice moves the past days, right? I mean, let's go to 4 hours to see more candles here. We had a nice little move, right? So that was the, let's say, the point of turn. This is where everything started turning around. It gave us a nice high low, and then it gave us another high low. It wasn't so clean about the highs though, right? We didn't have a nice clean highs. We got like equal highs, and these highs are not that drastically, so to say, higher than these highs. But at least, very weak signs of, breaking the structure. This is the levels that we need to see that, price action has to break the previous high to go higher to, have a nice clean area of interest, so to say, that we broke the structure. So structure got broken and it went a little bit parabolic. Parabolic is when we give that term to a chart when you see huge momentum, drive the prices higher and higher and higher. I did the daily update earlier this morning. It's posted on the school as well. So after this live, you're more than welcome to go and see me how I do the analysis every day on the Bitcoin. So this is what Bitcoin is doing. It's going back to the ranges. I'm going to show you later how to draw the ranges. This is the range. It went back into that box. We call them range because this is, why we call them range? Because price action is going sideways, right? It dropped a little bit below and then it came back. Okay, so now the question is, will it stay within the range? Will be, can Bitcoin manage to stay inside the range? Because it's trying to get in earlier, but it failed. Now this is a second attempt. It went a bit deeper inside to the range, and now we want to see if it's gonna hold it, right? It goes inside the range, and once it was resistance, now we are watching to see if it's gonna flip it to support. Okay, I'm gonna take things slowly, one by one. Just to give you an overview what's going on with Bitcoin. This is the question: will it hold? I just want to make sure that I don't let panic go through your emotions and go through your trading, and people start panicking. Yes, it's a good time for you to take some profits. It's true, but is it the end? That was it? We don't know yet. We don't have evidence of it yet. So, before I carry on, I'll do a little question just to get to know to know you. Are you all doing good with the school? Do we have any questions about the school? Do we have any problems with the tools? Do you have, would you like, to give me a little bit of an understanding what's going on with your TA style, and maybe that you want more clarification, you want another a chance to show you, or maybe you want to ask me anything. You can ask me anything about TA, not about my life. Right? So don't be shy, come forward. Do you know how to find support resistance? Do you know how to do Fibonacci tools? Do you know how to read the indicators like the Stochastic RSI or the RSI? Do you know what's the RSI? What's the purpose of the RSI? Do you know how to translate it? Doing good at school, busy with the review and tool practice. Okay, that's good. That's good. Practice makes you perfect. Give me 1 second, guys. I can have a phone call. I will not be long. I'm just going to tell them that I'm live, and if they have something urgent to tell me, give me 1 second. I'll be back with you.
Okay, let me roll that through my thing. I'll get chat again. It'd be nice to get. I mean, I know we're not meeting at all now, so I don't know. I don't know if this topic would have been give us to get together and maybe sit and study it and stuff. I'm gonna put this not out of the end.
Sorry, guys. Yeah, it was a phone call from the day job, so they want to ask me some questions, technical stuff again. I'm a troubleshooter. Right, going through the lessons again, refresh my mind. I don't always remember everything. That's all right. That's all right. BBWP. Okay, that is from the Crown School. Okay. Can you go please over support and resistance? Second guessing myself. Okay, that's good. Which candles to use to get the lines, using the beam, the current market, where the main the token's going up, not sure. Okay, you are relying heavily on Stochastic RSI. That's good. That's good. Okay, any guidance on backtesting? How do you do it? Identify internal and external structure will help things. Identify internal and external structure, that is market structure. Okay, where did you learn these? BBWB is also, yeah, I know. Besides the Stochastic RSI, what other indicators you would recommend to have a long, short as a criteria levels? Okay, basically, guys, what we usually do, right? We are based on the price action. Okay, price action is a real-time thing that goes on the chart. What happens in the markets, you can see it straight away on the price action. So always remember, please, that price action, let me write this here, PA, if you see somewhere written as PA, right, we'll call this price action. So PA is always real time. Okay, what you see now, what is printed, this is what happens. Okay, you cannot see anywhere else around the world what is going to happen next. Only here you can see what's going to happen. All right, it's gonna, it's gonna be on the front of your eyes. It's that simple. Okay. If something happens, let's say that huge pump, and you're trying to find why this huge pump happened, and you're trying to look on X, Twitter, TikTok, Facebook, any blog site, to find some information, the news, it's going to take you a while for the news to reach you, right? But by the time the news are going to reach you, it's already too late, if that makes sense, right? Because an event has to occur, then people need to realize this is an urgent event. Then they need to gather the information about it. They need to double check. I know they don't do that anymore, but this is what they should have done, to double check the information if it's correct, if they have the story correct, right? If the source is correct. And then once they understand what is happening, then they're going to prepare the news for you, right? And then they have to wait for the right time to broadcast this news. Either a television, either a news, either a website, either a tweet, a post. So when you see news out there, it's already, the event already happened. So the market already reacted to it. So these news are not news to you anymore, if that makes sense. So what I'm trying to say about this is that do not try to lose your focus from the charts to find an excuse or a label why the market pumped or why the market dumped, right? So what I usually say personally is I don't need excuses and I don't need labels for me to, to understand why the market dumped or why the market pumped, right? All I care is me to see all the signs on the price action, which is real time, and I want to make sure that I see everything on time so I can react. Okay, so another little quote, like I can give it to you for free, is that all the professional traders, all the traders, the serious traders, right? That they're taking this business seriously. They do this for life. They're doing this for business. They're making money out of it. All the professional traders, they never predict the market. They will not go around and tell you, oh, it's going to go up, or it's going to go down, and it's going to go to that level, and it's going to go to the other level, and then, in 3 years, you're going to see this is going to happen, blah, 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 blah. Professional traders do not predict. We don't have the crystal ball. I have one, but it doesn't work. It's a fake one. Yeah, I got it from the bazaar. So anyway, long story short is we do not predict, we always react. So please remember that. Always you are reacting to the market. I'm going to say that again. We always react. Okay? So don't listen to anyone out there trying to learn the TA and trying to do it on your own. Okay? Sorry, I just plugged in my watch because it was running out of battery. So sorry about that one. So so trust no one, listen to no one. What are you reading out there? You need to have a very, very high skill of, let's say, filtering. You need to filter all the information, right? And when you are not, let's say, when you are new into the market, in the trading, and you don't have a huge experience, when someone is giving you a true story, a valuable information, or a BS, right, information, maybe you're not on that level yet to filter all this information. So don't really bother your brain to be overfilled with this information and you don't know, to believe it or not, and then it will create this confusion in your mind, and then you get lost on the charts and you don't know which direction you should look, right? So that's why I'm here to help you and giving you some good guides, basic guides. It's very basic, but a lot of people get carried away and they lose track on the way. So don't listen to people. Do your own research. Don't go away from the charts. I have the tools for you to see what's happening in the charts. You don't need to move away from the charts. Social media is nice and cool. It's good to have fun, and a lot of people are trying to be liked a lot, right? So they do all these nice contents. They kind of do all these nice posts because they want to be liked. They want to have followers. So they're not focusing on trading career. They're focusing on the social media hype, and the ones that likes, and the one that clicks, and the ones that have a nice profile with huge followers, and then they want to post pictures of them with the Bugatti, and Lambo, Ferrari, Porsche, and then it's all rented, and then they're going to drive out with a Fiat. Nothing wrong with a Fiat. It's fine. Fiat is a nice car, but yeah, don't try to believe these iconic and images and stuff like that. Trying to focus on your TA and trying to make it on your own, right? Because trading, it's a solo game. We do say that it's good for you to have trading buddies, and it's good for you to say that you need to have mentors left, right, center. But when it comes to the time that you need to trade, you need to sit on your own and apply all the things that you learned, right? So you need to apply all the theoretical. Now it has to turn into practical. So you need to apply all the stuff that the tools, the methods, the strategies. You need to apply them on the charts. So who's going to do that for you? No one. You're going to do that. It's not me doing it for you, and it's not going to be your neighbor is going to do it for you, right? Not your cousin, not your neighbor, nobody. You have to do it. And once you do it on your own and you understand what are you doing, then you can have a plan. Then you can see, where it goes, and then you can be confident for you to put your money down. Okay, and that is not going to happen from day one. I understand that it's not going to happen today. You need to spend some hours on the charts for you to understand. A lot of people, they listen to influencers. Oh, it's popping. Bitcoin's going up. This is your last chance. This is lovely tales that we put out there on YouTube that creates the urgency, right? And that urgency is directing in the wrong direction. They're trying to create urgency for you to see the video. But people, when they see the urgent message out there, what are they doing? They jump into the market and they're buying tokens, and they don't know if there's the right spot to buy it. Is it the support level that I'm trying to buy, or is it on the top of the mountain? And I'm hoping. Do you know how many people bought up here? Plenty. I can guarantee you that. How many people bought it here? Plenty. I can guarantee you. How many people bought it down here? Very little. Very, very few people bought it down here. Why? Because they were watching a down move, right? Who's going to buy when things going down? No one, right? So who bought it over here? Some, right? I'll say some people will buy this. Why? They will see the opportunity that was giving you a high low, right? Bit risky, bit early, but some bought it here. But the majority of the people, they bought it up here, or even up here. These people, will they make some profit? Of course. Will these people will make profit? No, right now in the red, right? So watch out from the influencers, for the third party people out there in the social media, blah blah blah. Don't fall for any traps and tricks. They're doing their own stuff for their own purposes and not for the TA, not for the market. Everyone is going to tell you, oh, this is not a financial advice, right? They may have a funny voice as well.
This is not a financial advice.
Right, something like that. And they're going to say to you, do your own research. They don't want any liability with you, right? They don't want any liability with you. So you need to do this on your own, right? So that's why I'm here, to help you to see things clearly, trying to understand, where, you need to identify the direction and go with the direction, right? Another quote that I say very frequently is, don't be the salmon, right? What the salmon is doing, the salmon is trying to go against the flow, right? That's its nature. But, every time the salmon jumps out of the water to jump over the rocks to go to the higher level of the river, there's always danger that a bear is nearby and waiting for the salmon to jump, so for the bear to catch it and eat it, right? So remember that picture, that the bear's always going to be outside the river waiting for the salmon to jump. So don't be the salmon, right? Don't go against the flow, because the bears are going to get you, right? So don't be the salmon. So always find the direction, find the key levels. Right, let's talk about the key levels, because it was one of the questions here on the chat. How do you find the key levels? The easiest way for you to find them, let me hide all these saves here. Make sure that it's nice and clean. Nice and clean. Here we are, all hidden. Good. You woke up this morning and you open a chart for the first time and you see Bitcoin, or whatever that is, maybe ETH, maybe Solana, it doesn't matter. You open a chart and you're like, let's go to the daily. To have big candles, here are big bodies, big candles, and you're like, okay, now what? Where do I start from here? What do I do from here? And you need to find the levels.
I can't see your chart. Is everyone else can see it? I can't see you sharing.
I'm sharing the chart of Bitcoin. What you guys see? Let me see what you see. You should see my chart.
Yeah, I can see it, Thals.
Okay.
Okay.
Next one.
Okay, something wrong. Sorry about that. Thanks.
That's all right, darling. Trying to log out from Zoom and come back in. Maybe the sharing did not come through.
Okay. Thanks.
You're welcome, darling. Right. Okay. I can see it, BTC, that's fine, cool. So here we are, we've got Bitcoin, and you're like, okay, I see the chart, and by the way, just to let you know, I use dark colors. The background is dark because I spend a lot of hours on the screen, so I use it dark, so it doesn't, my eyes don't get dry, so to say, staring at the white background. So I'm using black background. Now the gold is the up move and the silver is the down move, right? So pretend that the gold is the green and the silver is the red. Now, why do I use different colors like gold and silver and not green and red? And that is purely psychological, right? Why is that? Because when you see green in your around your life, you think that green is good, right? See it as a traffic light. When you see something green, it's good, right? And you see, when you see the traffic light is green, it's good for you to go. The road's clear. You have a priority. Off you go. When you see red, right, automatically red, it means stop, right? You need to stop. It's danger. So on the trading chart, I don't want to have red and green for the same reasons, because green will give me the okay for me to go higher, right? I say, okay, everything is green, all good. But when I see red, I'm like panicking, right? It's going to create panic. I'm like, oh my God, something's wrong. It's not good. Anything to do with danger signs, all of them are red. All of them, right? All the danger is red. So why in trading, which is a business, and I need to follow the direction, either it's going up or it's going down, why do I need my brain to feel danger every time it sees a red candle? So I remove the green and the red candle, and I use other colors that are neutral and will not work subconsciously in my brain, okay? So I need to make sure that it's like colors that it do not create panic. So gold is good, high quality, right? Precious metal goes up. Silver, a lower value, it goes down. Simple. You can use any colors you like, you like. I use, back in the day, I'll give you another theme. I had a different theme. Back in the day, I used to have blue for the boys and pink for the girls. So let me show you how it was. It was like this, right? It was blue for the up and pink for the down. Boys and girls, right? And it's not about boys and girls. It was about, the nightclub thing, right? In the nightclub, what colors you have, the lights. Majority of them is like blue and pink. They write, so to say, in the night with lovely colors. So, it's contradicting with the black. You can see blue and pink, quite decent in the dark. So that's good. Because I've come from the web room, I said, okay, why not? I'll use the web room theme colors, and we have like the yellow and black and gray and stuff like that. So that's the, let's say the gold and silver. It's the theme of the web room. But again, nothing to do with the red and green. Okay, that is trying to relax your brain. Don't use red and green for your own convenience. Okay. Also, you can see that my wicks have neutral color, right? All the wicks have neutral color. I don't have yellow wicks and gray wicks. I just have simple light white color because I want to make sure they stand out from the black background. Okay, and simple, neutral, nothing to do with the candles, right? So that makes my charts nice and clean. And also you can see that, I have the bodies a little bit darker than the borders. And that is a nice effect, right? To keep my charts nice and clean. Now, back to how do I find my levels? For me to find my levels, I love to go to a higher time frame. I'll go to the weekly, okay? I may go to the weekly. Don't be afraid to use a weekly time frame. And now you can draw some lines and say, okay, what do I see on the weekly? Let's measure, let's find, let's say, the key levels all the way from the very bottom of the market. Now, if I press Alt and H on my keyboard, then on my on my chart will print an horizontal level, right? So I don't need to draw lines, it's just Alt and H. And make sure where your mouse is, your cursor is, the area that you pay attention. So I want to pay attention, I'm going to draw it a little bit with a pen. I want to draw attention here, right? That was the very bottom. So I want to draw a line, something like this. So let me delete that and have a nice clean level. Here it is, Alt H. Now I got an horizontal level with non-stopping, right? It's like it goes infinity. So that is a key level. Here's my support. Everything turn around here. Okay. Can I see another level somewhere around these levels? Right? I say, okay, it went up, it came down, it pushed up, it came down around the same level. So let me print another horizontal level here. And then you can see that you have a confluence on the left as well. Look at that. You have a level here, a rejection, came back, it broke it, came down, rejection, right? And then it broke it, resistance, as a rejection point, as a support, so to say, right? Rejection point can be either way. Let me bring that back. Rejection point can be either resistance or a support. It's price rejecting a level. So it got rejected as resistance. It got rejected as resistance. It got rejected as resistance. Now he got rejected as support and as a support. 5 touches in the same area. That must be a key level. Easy to see on the weekly, right? You can go a bit higher. Do I have something in common in these levels? Yes, I have something in common in these levels. Here we are. I got resistance, resistance, support, support. So that's another key level, right? Here it is. And when you're looking on a high time frame and you're looking for, the levels, is it the bodies are you targeting or the wicks? The answer to that, when you're trying to find key levels, it's much better for you to target the bodies, right? Where do you have the majority of the bodies turning around? Look at where the bodies are here. I'm going to maximize that a little bit. Look where the bodies are here and we'll look where the bodies are here. So trying to fine tune around between these two levels. Here it is. Okay, what about that one? You can fine tune it around this area. Majority of the bodies are here, right? The majority of the bodies are here. What about this one? Majority of the bodies are around this level. Here we are. Okay, can I go higher? Can I zoom out a little bit and go higher? Can I see another level? Oh, I see another level here, right? Here it is, roughly. Here we are, around these areas. Majority of the bodies are here. Here we are. Let me fix that. Around there, around that area there. So what do we see here? Rejection as resistance. Rejection in this area as resistance. We had some fight here as resistance. Resistance, resistance, and then we broke above. So that's another level, right? And that you can keep going onwards and onwards and you can find the key levels. Here you are. You have another key level here, right? That was a support. It broke above, it became a support again. Support, resistance, resistance. It went above, and that here again, it was resistance and it broke. So you got another level. This is how the easiest way for you to find levels. Do you have another common area here? That's okay. Let me draw a line here. Here we are. You've got another level here. What do we have here around these levels there? So we have major resistance here. We broke a little bit, but it came back again. We lost it. And the same thing happened here. We broke it and we acted as a support. Came back, we broke it. And now we're above this level. So here you are on a high time frame. You can find key levels, right? On a high time frame. You can do that on the weekly. You can do it on the monthly. Monthly, you're going to find more solid levels. A bit harder to work, but again, it works. I mean, look at that. That was the resistance. That was an intermediate for the monthly, but the weekly is fine. That worked for the monthly. That worked for the monthly. That for the monthly, if you were targeting the monthly, you probably say, I would like to see something like this. On the weekly, you may refine on the weekly. Again, it's not that bad. You've got plenty of bodies here, plenty of bodies here, plenty of bodies here. That's not bad. I like it. I live it. fine tune everything. And here how you find the key levels, right? Nice and easy on a high time frame. No special tool. You did it on your own. Okay? So let me delete that. So here you are, key level. I mean, look, let's bring the key levels back. Let me bring the levels back. So here's the levels, right? I'm gonna dark them out a little bit. They're too bright. So I'm gonna make it a little bit gray. You still can see them because they're thick. And now go to 4 hours and have a look what the price action is doing on these 4 hours. I mean, if you sold them on the weekly, the 4 hours should not be any different, right? Here's your support, right? And you know that as long as you are above this line, you're good to go, right? You found another level, right? You found this as resistance. It went back and then came down to acted as a support. Can you refine this a little bit? Because there's a lot of gaps here in distance. Of course you can refine. You went to a smaller time frame, you can refine. Few centimeters there is for, left, right, center, where it makes sense. Does it make sense to be here? Do you want to bring that a little bit up there because you've got majority of the touches? Of course you can. Once you're happy, you lock it. Are you happy with that one? Unlock it. Use the padlock. That means the padlock means that line will not move, right? Are you happy about these levels? I say, yeah, I'm happy. Majority of the support is here, so I'm happy with that one. I'm locking it. Here it is. And then, you see what happens here. Resistance, break a little bit above, fake out, came back, resistance, boom, dropped it, lost it, right? It came back to this area, big fight, right? Resistance, and then it acted as support, lost it, goes up, goes down, goes up. It's playing along with these lines, and then it lost it, and it acted as resistance, and then boom, it lost it, right? It came back again. So are you happy with these levels? Yes, I am. Lock it. Padlock. Goes nowhere. Go higher. Right? And this is how you go. This is how you do it. Level by level, use the higher time frame for you to find key levels. Can I see another intermediate levels? I see a lot of levels here as a support. I see something resistance. Something is looking good here. So here we are. Another one. Right? Go to the left and see it. Yes. It's treating these levels nicely. Resistance, support. Okay, I like this. Support. Another key level. Here it is. You like it, lock it. Okay? And this is how you draw, support and resistance key levels. And how you're going to treat them. You're going to treat them that next time when the price action, right, is going to come back to these levels, you're going to see, some support. That's okay. That was my support. I need to refine these levels. May I need to refine these levels? That's all right. I mean, it's not too bad. Support. No, it's fine. I'll leave that here as it is. I'm going to lock it. So what do you expect now? You expect that, the price action is going to, react to these levels. That's what you expect. You expect that, price action is going to get a reaction from this area. And then you go and trade it, as easy as possible, as clean as possible. It doesn't take a lot of time. All you have to do is zoom out a little bit, use a high time frame, and see where the price action, is giving you a kind of an idea of what's happening. Okay. What's the lowest time frame when you do this on? Like, I can start on the weekly and monthly to find my key levels, and then I can go to 4 hours to refine. And, you can do that nice and easy. Now, a little bit more advanced. Let's go. I mean, this is a simple one, a simple way. You can trade it. It's very, very simple. Now, another thing that you can do, now, if you like these lines and you don't want to lose them, come back here to the right, the third icon. It says object tree and data window. So this is all the horizontal lines that we draw recently, right? So I'm going to mark all of them with the shift key, right? When you see small dots on the lines, it means unlocked. When you see big dots on the lines, it means it's unlocked. So I forgot to lock them. Here we are, and here I am. So now I highlighted with a shift. I click on the last one, right, once, and then I hold shift and I click on the top one. So it highlights all the lines together, right? Right click, or you can do a left click here, that little icon here, or right click on them and says create a group of drawings. And now you have a folder holding inside all your horizontal lines, right? And you can name that key levels, right? And you can say on weekly. So you can remind yourself that these key levels, you find them based on the weekly time frame. Okay, right next to it, you have the padlock. It means you lock all the lines. All these lines are locked. If you unlock them, all of them are unlocked. Big dots, you can move them around. If you lock them, it locks all of them at once. And also you can hide. You see the little eye icon? You can hide them all at once. So if you don't want to delete them, just hide them. Okay, and you have a nice clean chart. Now, another advanced way of doing things, which is a little bit more advanced, but it's going to be helpful for you to target an area. We want to find a range, an area that is ranging. What do we mean a range? Let me draw a box. We want an area that the price action is having common lows and highs. So we call this a range, right? So we need to identify something like this in the chart. When you identify this, use them, okay? So let me go to the most recent area. Where do we see a range? Even the 4 hour, even on the 4 hour, it's fine, okay? Where do we see a range? So I'm gonna draw my rectangle. I can even go to the weekly. Do you see a range on the weekly? Do you want to use a 3-day? It's fine. Do you see a range? A common highs and common lows. Right? This is a range. This is a level. So this is my rectangle, which is my easiest tool. Why? Because I have 3 levels. I have the high, the low, and the 50%. Okay? Now, if you want to do it manually with the lines, horizontal lines, as we're doing this morning, you can do something like this. I say, okay, where are the common grounds? Here is my common ground, all my support, right? Bodies. Where do I have majority of the bodies as high? So here you have it. Low, high, and then you need to find where is the 50%. One way to find the 50% is using the ruler, right? Draw the top and the bottom, and you see that vertical line inside that ruler, it's your 50%, right? So you're going to put your cursor exactly where the line is and press Alt H, and here is your 50%. Voila. So now you marked your range. Okay, now this is again key level, but not based, let's say, on the weekly, the whole chart. You're focusing only on the last period, and you found this low level, mid level, and high level, right? The top level. So how do we treat these levels? As support and resistance. And we know, we identified, by experience, when you are observing the charts and you are trading all the time, you identify that the 50% is a major with high significance role, the 50%, the mid, right? So we're going to pay attention to that, okay? So you can find the ranges, and then what are you going to do? You're going to find this as support, and you're trying to push your trade all the way to the up, right? And when you reach the highest level, you see that was a resistance, that was a resistance, that again was a resistance, that again was a resistance. So every time when you're hitting resistance, what are you going to do? Either you're going to take profits, or you're going to start shorting, selling, right? Going down. Why? Because you expect to act as a resistance because it did it before, it did it before, it did it before, and it did it again afterwards. So you treat that as resistance, right? You say, okay, this is my TP. What about that? The bottom one, support, 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 a little bit of fake out, deviation, we call it. Advanced people, we call it deviation. Newbies, we call it, it was a fake out. It tried to get out, it's the easiest term to understand. That's why we call it fake out. I'm not saying that you should, you're a newbie and you should use that. It's just a simple term for people to understand that it was an attempt and it failed. And we call it a fake out. Right, so that was a fake out, a breakout, a fake out, breakout. So it came back again. So that was a support, that was a support, that was a support, that was a support. That was a little bit of support, and then it came back and then it broke it. And we're like, oh, that's new. But what happened? Deviation again. And it came back to the range. So if you're back to the range, what are you going to do? You're going to go long, aren't you? Of course you are. You're going to go long, right? And you're going to target that high with a bus stop in between, right? At 50%. So this is how you can do key levels, trying to find ranges, right? Big or small, it doesn't matter. Trying to find the ranges and trying to mark the levels, high and low, and 50%, and then trying to trade it. That's the easiest way to do it, okay? Can I find another range? Of course you can find another range. I use the Rentacle tool to speed up the process. A Rentacle tool, it gives me the high, the low, and the 50. One go, right? I don't need to do 3 lines in one go. Do I see another range around these areas? Yeah, I can see. I see common lows and highs, right? Here we are. Do I have a range? Here it is. That was resistance, right? That was support. That was a resistance, right? So here I am. It flipped. That was resistance. That's a support. That's a high. That's a high. That's a low. Look at that. Can you trade that? Of course. So if you're in the bear market, you would like to find ranges and trying to build your positions at the bottom of the range and try to target higher. Okay, is that a range? A little one, of course. Move down to the time frame. Use smaller time frame. Do you see a range here? Here we are. Range, rectangle. I see multiple range here. Here we are. That's it. Here's your range. Common grounds on the top, common grounds on the bottom. Here's your 50%. Look how every time it's reacting to that 50%. Right? It goes up, hits resistance, comes down to the 50%, push one more time up, comes down, huge more volatility. That was when you see these huge wicks, right? Other people will call it manipulation. Other people will call it market shakeout, right? Market shakeout, it means that the market is trying to shake out the traders. It's like when you throw your dog or the cat, which is even worse with a cat. Cats hate water. So when you throw the cat in the water, right? Then immediately they get out and they shake the bodies to get the water out of them, right? They don't like water, they hate the water. So this is exactly what the market is doing. When they see high leverage traders, the market is doing a shakeout. It's taking out all the high leverage traders. They don't like them, okay? So they shake them out. So other people call it manipulation, other people will call it a market shakeout. It doesn't matter what it is. You need to understand that the market is cleaning out the high leverage. People that are trying to abuse the system, they're getting kicked out. Simple, right? It's very, very simple. And again, bottom of the range, hit the 50, came back, and then it broke through. So every time you identify a range, guess what are you going to do? Trying to get in at the lowest possible levels of the range. All you have to do is identify the levels of the range, right? And, do we have a smaller time frame? We have the big range here, remember? Let me mark this as red. I'll do that a little bit red. And it's too bright. I'll decrease a little bit the opacity, style, opacity into 50%. Here we are, 38%, fine, good. So here's the red. Red is the 50%. You're going to see later why I use the red as 50% in my ranges. Okay, so here's my 50%. Okay, so on the smaller time frame, let's go to 4 hours. Can I see a range in this area? You can. Here you have common grounds. Right, here's your common grounds. Smaller time frame, smaller range, it doesn't matter as long as you identify an area of a range. Because you don't, I mean, every trader wakes up in the morning and opens the chart and you don't know where exactly you are. You need to find something solid, a base. A base is a range, a consolidation. So maybe you woke up this morning and you're up here. Okay, you need to find a base somewhere. If someone woke up another day up there, he needs to find a base. That was a range. Someone woke up a day later or hours later and he sees the chart and he finds this base, right? You woke up that day and you found that range. It's fine. You know, everyone will see differently the ranges because it depends what time they went to the charts and depends what chart they see. Are they seeing you know, do they see Bitcoin? Do they see Ethereum? Do they see, you know, Solana? So you need to find a range. A range, it's a pause into a direction to a trend. Okay. Now you learned from the school, we all learned from the school that the market's doing 3 directions, right? Either it's going to go down, either it's going to go up, or either it's going to go sideways. Now I like to make things more simple. And I say the following. I treat the sideways action as part of the previous trend. So if the price is going down and then it's doing consolidation, I see these as one. Why? It was going down and then it's going flat. Nothing changed. So if it's nothing changed, right, it's like a pause, right? So if you remember that, you know, back in the days that you have the pause and play button on your Walkman, right? So when you press pause, what happens? You stop where it is, and then when you press play again, it carries on. So, to me, that is one action. When do I see a second action? When I see something different, when I see reversal. So that is action 1, wave 1, direction 1, and this is direction 2. Right? This is number 1, and that's number 2. I see the market as 2 directions. One way is this, going sideways, consolidate, and then you can carry on. What's this? One move, downtrend. It went down. Someone paused it, advertisement came up, right? And then you carry on. So to me, this is one direction. And the same thing upwards, goes up, consolidates, still one action, just a pause, and then it continues. If it continues, I see that as one action, one direction, one trend. It just happened to pause a little bit. It's fine. Someone went to the loo. It paused it, right? But if it goes up, then consolidates, and then change direction, this is the point I say, okay, I split that. And that's not even a straight line. Let me do a straight line. Here we are, straight line. Can I have a straight line here? Here we are, straight line. So I see this, right, as 1, and that is 2. Why? Because we have a change, we have a shift. Someone was listening to A side of the tape, and this is the B side of the tape. Simple, right? So this is how I treat the market. So consolidation is a very good base for you to start looking and pay attention. Do you pay attention to this area? I say, yes, I pay attention to this area. Now I have a range within a big range. It's good, it's a top. How do you treat this? As resistance, right? And you monitor it. You say, okay, you know what? On the big range, this is resistance. I'm going to short it. I have higher possibilities that the price is going to go down, right? So always treat resistance as possibilities. Treat support as possibilities. There is no guarantee which way it's going to go. Okay? There is no guarantee which way it's going to go. Is it going to go up or is it going to go down? There's no guarantee. Why? I'll go back to the basics, because the price action, the market, it's a random walk. Do you know what is a random walk? Random walk, it means that the market can go either way at any point. At any point. Right? At any point. Random walk, it means that the market can go either up, sideways, down. There is no way for you to know it before. Right? There's no magic bullet for you to know before. Can you show how to get the middle line of the rectangle, please? Only on TradingView, right? You cannot get, unfortunately, you cannot get that on the exchanges when you do drawings on your exchange. They don't have the full scope of the tools because they're using the free version of TradingView, right? They have the limited edition of TradingView. However, on the full version of the TradingView, the application that we're using here, you go to the styles, you have the borders, which I clean the borders, right? Minimize that, and then I have a middle line, and then you can have any color you like, any style you like, with your, middle. This is the middle line, which is your 50%. You want a solid, you want a dotted, it's up to you. You want a thin, you want a thick, extra thick, it's up to you. Right, any color you like, okay? And then the background, I just use the background, I use a white color, and just I turn down the opacity so I can see the price action. I don't want to be, because people say, oh, why don't you use gray? Because if I use gray, it blacks out the, the chart, right? So what I'm doing, I'm using opacity to make it transparent. Here it is, that's good enough for me, it's fine, okay? Here we are. And that's it. Now, if you want to extend to the right, it means it goes to infinity to the right. Extend to the left, infinity to the left. We don't want to do that. We just want to keep this area of focus, and then you need to know the top, the bottom, and the 50%. And that's it. Simple as that. If you like it, you name it range, right? And then go to templates and save that. Save as, give it a name, range again, and range number 2, because I've got plenty of ranges. So you save it and it's done. So every time you're going to draw a rectangle, let's change the settings here very quickly. I don't have a background, I want to have a border. I have something like this, red line, I don't know, anything, extend to the left, extend to the right. So let's pretend that you have this weird rectangle, right? Here's your rectangle, and you wanted to make that very quickly back to range. It's a template. Right click on it, template, and you say I want range number 2. Boom, goes back to that, right? If you want to have a different template, maybe I want to call it support and resistance. SR means, for my language, support and resistance, right? Right click, and do I have another template? I've got plenty of templates. Liquidity pools. You got different styles, different colors, different text. Everything is on a template, so I can do my TA nice and quickly, easy, so I don't need to waste my time. Okay, so right click, template, range. That's my little range that I have. That's what I usually do with a green line, because it contrasts with the gray. Green is easy to see, and also I type my little range in the middle. It's fine. Just for the fun of it, just to make sure. Range 2, this is the one we just designed, right? Take your pick, create your own templates. So yeah, this is a little bit more advanced and a better approach how to do your TA, and for you to start drawing your ranges and then plan a trade. It's okay, did I where am I in the range? Am I at the bottom or the top? Is it is it the eye on the top and supposed to be resistance? In some point, it's not going to be always forever resistance, right? But you have good 3 roughly to 4 times to act as resistance. So that's 1, that's 2, that's 3, that's 4, that's 5. So maybe the next time we're not going to be so lucky for the 6th time for number 6 to be resistance. Maybe we're going to break that, right? How long is going to be resisting that? You know, it's not, do not guarantee yourself always that it's going to be resistance, but you have a high possibility. We are trading with possibilities, right? So you see these, I say, okay, next time we get there, I have a high possibility that I'm going to go short. Next time, high possibility that I'm going to go short. There is a chance that it's going to break it and go higher. Of course there is, right? But, you know, you're trying to see where your chances are. You are betting with possibilities, right? And probabilities. So next time you come to this, you treat it as resistance. So you say, hey, I have 80% chances to go down and 20% of chances to go high. So which way will I go? I'll go down, right? And the same thing, it happens when you're at the bottom of the range. You treat it as support. It's okay, when you're approaching this area, that's a support, that's a support. That was a deviation, a shakeout. A lot of people that they're trying to go in here long, the market went a little bit lower, right? And these people that are trying to go long, they got kicked out. A stop loss, now and then it's okay for you to get kicked out by a stop loss. Then a lot of people, this is a trick, this is a trap, this is a bear trap. Let's talk about bear traps. What is a bear trap? A bear trap is when the market is giving you the idea that it's going to go down. What happens? It breaks the support and it goes down. And guess what happens? Everybody goes bananas, right? They go bananas. They go, you know, they going short, right? So these people going short, and the market turns around and goes above the support and they get kicked out, right? And then it comes back and it's acting that as what? As a support. And say, okay, I'll take my chances again. Majority of the time, that was a fake out, a deviation, a bear trap, a liquidity hand, stop loss hand. 1,000 names out there. 1,000 names. You can have as many names you like. All of them means the same thing. Okay. So when you see that it's coming back and say, okay, that was a fake out. It came back, so it's acting again as support. So I have higher chances we're going up again, and it goes up. So you had, let's say, one trade successful, then you have a second trade, a second attempt unsuccessful, and then you had the third trade going up. So you had 3 trades, 2 wins, 1 loss. That is not bad at all. Why? Because you have a 66% hit rate or win rate, which is a very, very good. Majority of the newbies, they have a success rate as low as 30%. So to go all the way up to 60 or even to 50, it's a very, very big improvement. Okay, so be proud that you won 2 and lost 1. It's okay. Now, people that they lose 30%, or let's say they have a hit rate or win rate of 30%. So that means what? Out of 10 trades, right? That means they had 7 losses, 3 wins. Now, does that mean these are bad traders? No. Does that mean that they should not trade? No. Does that mean that, they just, leave it, man? You don't have it. It's not good. You're not good. You're out. No, no, and no. You can be a successful trader with 30% win rate when your ratio, I'm going to talk about the ratio, the ratio is above 3-1, right? Now, I used to call it back in the day the triple R, right? And people used to call me, what is your triple R? What does it mean? Risk, reward, ratio, right? Risk to reward ratio. Other people like to call it R. Other people like to call it double R. I like to call it triple R. Haha. It's your triple R. But anyway, if you see triple R, what does it mean? It means risk reward ratio. So if your risk to reward ratio is 1 to 3 to be precise, technically speaking, risk to reward so you're risking 1 and your reward is 3 times higher than your risk. So if your R is higher or equal 1 to 3 as risk to reward, even with 30% win rate, you're going to be surprised that you're going to be in profit. You're going to be profitable. You're going to make money. It's going to be positive, even with 30% win rate. How bizarre that is. But it's true. Risk reward ratio is the magic tool. Now, what separates the, let's say, the good traders and the bad traders? It's not the strategy, right? And it is not how you do the TA. It's how you do your risk management. You need to be very, 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 very good, super good, extra good. You need to be the master of the masters on risk management. Because if you know how to deal with risk, then you know when things are going wrong. And this is when you're going to start closing trades because they're going wrong, aka you have your stop loss in place. And when things are going right, you are enjoying the rewards. And if your rewards is 3 times the loss, it means that you can lose 7 times, but 3 times, if you win 3 times, and then your ratio is 3 to 1, that means you outrun the losses. And if I make it simple with mathematical numbers, let me try to make it a little bit simple. So let's put 1 unit per loss, right? Because your risk reward is 1 to 3, right? So 1 to 3. So 7 losses times 1 unit equals what? We all know numbers. 7, right? But if I have 3 wins, right, which each win is a 3 unit, aka 3 to 1, 3 times the loss. So what do you have? 9. So who won? 9 is better than 7, right? So 9 won the 7. So 3 wins cleared the losses. So if I take 9 minus 7, right, equals what? 2. So you're going to be 2 units in profit. With 3 wins, you break even the losses, bye-bye, and you are 2 above. So if you started with 10 units, right, 7 were losses, and also you had 3 wins, well, sorry, the wins are there, 3 wins, then you, in the end of it, you're going to win 2, so it means now you are on 12. So you jump from 10 to 12 after 7 losses and 3 wins, right? So it is very, very important for you to make sure that your ratio is above or equal 3 to 1. 3 to 1 is good. It's okay-ish, right? 4 to 1 is very good. 5, 6, 7, and onwards is fantastic, right? So losing 7 times, you shouldn't lose your courage, right? You shouldn't look down on yourself and say, oh, I lost so many times, I'm not good. It doesn't matter. You don't know when the next win is going to be, right? And if your ratio is good, you're going to be fine. Okay, that is part of the risk management. Now, how do you use the risk? I mean, what's the tool? We know the tool. We have the long and short tool. Where do you find? Here on the left, right? You have the projection, and the very first one, the first 2 are long and short tools, right? If you want to go up, you're using the long. If you want to go short, you're using the short. So I have the little stars there because I want to have my shortcuts here. My shortcuts is my bar with all my shortcuts. It's all the tools that I use all the time. So I have it here. So let me use my long tool. Let's pretend that I wanted to enter at the bottom of the range. Remember, I have a high possibility to hit the bottom of the range and use it as a support. Okay, here we are. So I found a little range outside of my range. That was a fake out deviation, right, on the higher time frame. Now, where is going to be your target? Your target is going to be all the way to the top of the range. Remember the huge range. You're going to treat that range as what? As resistance, right? So you want to go exit a little bit before, right? Don't be greedy now. Don't be greedy. Try to get out before it hits the line, because it may come very close, something like this, right? And did not hit the line. Is that the same? That you spend all this time, you're trying to get up, even from here to there, and you didn't reach the line. So don't always target the line, just a little bit lower. So what I'm going to do, I'm going to target that line here, that candle. That's the last bullish candle, the bottom of it. So next time I wanna target that area, just a little bit there. Here we are. I'm done. So that's my TP. All right, so let's fix now what? The stop loss. That's my entry, let's pretend. So where is going to be my stop loss? Two possible scenarios. The closest to me lowest point, or another low that is nearby but it's lower. So it depends how much you want to risk, right? You want to go that way or you want to go that way. If you do any of them, let's pretend that you want to go a bit lower from the lowest. That is very safe. So what is your risk here? Let's check the numbers within the tool. Let's understand the numbers in the tool, because a lot of people don't understand the numbers in the tool. So what's that number? 2.99. What does it mean as a percentage? It means that your stop loss is almost 3% away from your entry. Where's my entry? Let me mark my pen. Where's my pen? Here's my pen. So here's my entry. The separation between the gold and silver, right? The white line, that's my entry. Here's my stop loss. The distance from here to there equals to 3%. That's good to know. So I'm risking 3%. Nice. What is my target? 28.8%. Lovely. So what's my ratio? So you're risking 3%. So you're risking 3% against what? Almost 29. So you're risking 3% against 29% profit. So if you divide that number, you get your ratio. But you don't need to do that, because why? Because the tool is going to give you the answer. And it's that middle box here, the lowest number, 9.65. That is your ratio. Which means what? You're risking 1, right, against almost 10. Your ratio is 1 to 10, right? So you're risking 1 to gain 10. Is that fantastic? It is. But people say, oh, it's too far away, 1 to 10. Can't I do something better than that? Yeah, okay. Why not? You can. But that's a good plan, though. It's a very good plan. Why? Because you trade in the deviation, the fake out. You're trying to go long. You get into the range. You're waiting to hit the 50. And then eventually, hours later or days later, it's going to hit the top of the range. And you're going to gain 28%. And that is without leverage. Can you imagine doing that on leverage? Right, so step by step, you are too afraid to stay for so long in the trade. Okay, what's the next target? Next target is the top of the range. What's the ratio? 1.9. I'm risking too much. Right, I'm risking too much. Can I use that low as my invalid point? You can. So instead of risking 3%, now you're risking 1.5. What is the ratio? 3.8. Is it above the 1 to 3? Of course it is. It's a 3.8. Is that a good trade? Of course it is. Grab it. Do you want to target, let's say, the bottom of the range? That increases 6.1 to 1 ratio. What if the 50% of the range? 13. to 1 ratio. What if I go and target the top of the range? This time is almost 20 to 1 ratio. Why? Because I decreased my risk. My stop loss was decreased. The first time I was using that low. Remember, 3%. Here it is, 10 to 1 ratio. If I decrease my risk to the closest low, my ratio doubles, 20 to 1. So you're risking 1 to get reward of 20. And your target's the same. Now, to be exactly fair with you, I used that little wick as my take profit. Here it is. I marked it 19.6. It wasn't a big difference, wasn't it? From 20 to 19.6. So this is how you do your risk management, right? And not only that, you don't stop there. You're always managing your risk. Always you're managing your risk. And how are you going to do that? Level by level. If the price action goes away from your entry, breaks that range, hits your first level, guess what are you going to do? You're going to minimize that stop loss. You're going to break that stop loss and say, hey, here's my entry. Where can I put my stop loss? On the 50% of the range. Why? Because you hit a key level. Did you break that key level? Yes. Okay. Can I move my stop loss? Of course you can. On the top of the range. So if you move the stop loss above your entry, what are you doing? Technically, I'll tell you what you're doing. You're doing risk to be equal 0, nada, 0%, right? 0%, that's it, nothing, zero, $0, no risk, I'm losing nothing. That's what you're doing. And this is what we call risk-free trade. When the price action is moving away from your entry in a big distance, you need to make sure that you're not risking anymore. Not 3%, not 1.5%. Now you're going to be in profit from your entry. If you put your stop loss above the range, you're guaranteed a 5.7% profit. So 0 risk and guaranteed reward, so to say, 5.5%. If the price action right now dives, you go to, let's say you're going to have a lunch. You're going away from the computer and your stop loss is sitting here, right? If that's going to dive for XYZ reason, I don't know, maybe a new war is coming up. I don't know. If something happens bad in the, you know, into this world and then Bitcoin is dumping and that comes down and you get triggered out by the stop loss, you're going to guarantee 5.5% profit plus. It's going to be a plus, 5.5 plus in your account. That's it, guaranteed. So this is risk management, right? We spoke about the levels, we spoke about the range, how you find them, but what is going to make you profitable, it's not how good you're going to find the levels and the ranges, it's how good you're going to use that short and long tool. Sorry, I'm going backwards, I'm keep on pressing on delete here, so to clean the chart. So it's very, very important how good you are with planning, right? How good you are with planning and how you monitor the chart and how you're updating the stop loss. That's the only reason to separate yourself from losers out there and winners. And eventually, you know, do that day in and day out. In a couple of years, you're going to become a whale on your own because you're going to create your own wealth. You're going to create your own money that way. And it doesn't matter how many times you lose. It doesn't matter how many times you lose. You know, in school, how many times did you have to go to learn maths for you to pass the test? Multiple times. Right? If you need to learn grammar, how many mistakes you made until you learn the correct grammar? Multiple times. So you're going to lose multiple times until you understand that, you know, how to win and do this right. And once you get it, it's done. Right, okay, let me see if we've got any questions. Do we have any questions? Okay, I will go into explain the RSI. Candle patterns, a single candle confirmation. You can have some confirmations, but I don't go crazy on patterns because sometimes they do work, sometimes they don't work. But let me tell you what works. On shall I do any? Okay, let's do an explanation. What works is when you have a candle, ignore the 50% line here, so middle line's gone. So you have a candle, doesn't matter what color it is. What makes a lot importance is the wick, right? Either side. But let's talk about the wick. Doesn't matter which way it is. What plays, a crucial to me like a role on my TA is I like to see how big is the wick compared to the body, right? If I see something like this, here we are. When you see something like this, what do you understand? You understand that you had the price action move from this level, it went all the way up here, and then it came down and stopped here, right? So that's why you have the body, right? So that's the start, the opening, and that is the end, the finish, the closing. So you have the open here, you have the close here, and you have a huge wick, right? Now that wick, you should not ignore it. It means a big rejection. One way, the easiest way, you can say, oh, rejection. Or you can say that is a selling pressure. Very, very selling pressure, right? It's pushing the price down. So either someone is taking profit or people start selling. So when you have price action going up and up and up and up, and then you have this kind of thing, right, printing on the top, and then you see weakness, you're like, uh-oh, that's it, right? We're losing steam. Why? Because that was a massive, massive wick. It means massive sell or a lot of people. It could be a whale selling, or it could be 1,000 people doing the same thing, taking profits, or they start, shorting, or they're selling the market. So you need to pay attention to these kind of actions, observations. Now they call it a shooting star, right? That's not a problem, but look what happens. It goes up, goes up, goes up, then you see a little bit of wicks, you see a big wick here, you get another wick here, you see there's no continuation, no big bodies anymore, boom, it comes down, right? And then you see a huge wick at the bottom. What does it mean? The opposite, right? It's pushing the price up, someone is buying, pushing, 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 then you see these wicks on the top, and you say, okay, there's no more fuel to go up, and then it comes down, right? Then it was a key level, then somebody said, oh, this is a key level, this is 50%, let's all jump in and buy, and it went up. And then what happens? That huge wick. What do you see? There's, a weakness, a rejection, and you're like, okay, that was it. And it goes down. Where did it go? Close to the 50. What happened when it approached the 50? Look at this number of wicks. And you're like, okay, this is done, right? You cannot go any lower. They don't let it go any lower. They keep on buying aggressively. Why? Because probably this is the late traders or retailer traders, the retail traders. Why? Because that was a nice big momentum move to the up that happened by a whale, a big guy with a lot of money, pushed Bitcoin all the way up. People got excited, came down to the 50%, and look what happened. Everybody started buying. Did it go far away? Not as that. That's a whale, that's a retail. Okay? So you're going to understand this. As time goes by, you're going to understand it. You're going to see it and you're going to understand. Look at that huge wick. What does it tell you? People are selling, right? People are selling. Comes down, trying to push up again, huge wick. What are they doing? Selling. It went down, right? Huge wick. What happened? Goes down, right? multiple weeks. What happened? Went down. So this is what I pay attention. Look at these wicks here. 2 weeks, close to each other, nearby, no confirmation, no any confirmation of building bodies higher. It just went bodies, small bodies, medium bodies go lower with higher wicks. So what does it tell you? People are taking profits or they're selling. They have no intention to buy. Sellers goes down. Simple, right? Very trying to use that, as simple as possible, use it as a tool and say, okay, what do I see this? Trying to translate. You see a candle and say, okay, what do I see? How do I see this? How I treat this? How I translate this. Being buying pressures, okay? They want to buy. Then you combine things. Oh, that's a low, that's a high low. Then you find a range. All right, I'm inside the range. People buying, this is high low. Which way is going to go? Try to make things as simple as possible, as practical as possible, trying to see the charts and see the direction. Okay, now what do we see here on the very, recently? This is a 4-hour candle. Let's go to 1-hour candle. What do you see? Weakness, bodies getting smaller. Now I have negative bodies, right? All gray. Let me take that long tool away for you. Here it is, gone. What do we see? We see a little bit of weakness, right? Bodies are getting smaller, right? You see wicks on the top, and then it's going down. So what do you see? Goes up, round, okay? And then you say, okay, we're going down, short term, very short term. This is 1-hour candles, short term. Where is the possible area for me to, to see a possible bounce? The easiest way for you to do it, which I found very useful, is use the path tool. And you see, this is a level, okay? We pushed to the up, then we came back. We pushed to the up, then we came back. We pushed to the up, a bit slow. It went up, okay, now it's coming back down. Where to? To these levels, trying to find horizontal levels, right? So I have the support here, and then resistance support here. Does it make sense? Is that visible now? So look where, take that arrow here, look where you have levels. You say, hey, I have a level here, I have a level here, and I have a level here, and I have another level here. You see, 4 levels. Why? Because of the bullet points. Point, let me mark the tool, the highlighter, please, thank you. So here's one, here's another one, here's one, here's another one, right? So all the way down, where is the high possibility that it's going to stop? And you say, okay, I have a possibility that it's going to stop there. It reacted to it, but it wasn't so strong to stop it. Okay, another area is here. Okay, another area, possible area, if I mark the line, thank you. Here is another area, it's here. If that's going to fail, where is going to be the next one? Next one is going to be somewhere down here, right? And the next one, sorry about the settings, here we are. The next one is going to be around here. So let me clean the noise. You go, you all 3 go, except you stay, boom, goes. You go, that little dot there goes. So here are the levels, right? Here are the levels. These are the possible areas that I expect Bitcoin to react. One level, another level there, another level here, another level here, and another level here. And if you be patient enough, you're going to see that Bitcoin is going to give you, let me go to 30 minutes. It's going to give you that reaction. Here it is. Consolidation in these levels, right? Now it's stopped to that level. Is it going to be strong enough here? Are there the bulls? Are there the buyers? They're going to show up here and say, oh, I see a range here. Are they going to decide to buy? And then we're going to see a continuation. Possible, right? So you see how easy for you to find the levels? No tools so far, no indicators, no nothing. All right? I see people are saying goodbyes. Thank you, Tammy. I'll see you later, another time. So the most long full body candles due to the whales. Yeah, I mean, when you see big momentum like this, right? We're talking about Bitcoin now, and Bitcoin is a multi-billion, asset. So for Bitcoin to go up, it needs a very strong factors. So either it's going to be the whales pushing a lot of money, or the Dixie, so to say, which is the value of the dollar, is decreasing rapidly, right? And because Bitcoin is the pair that we're looking at, this chart is Bitcoin against USD dollar. If dollar, the value of the dollar goes down, that means the value of Bitcoin goes up. Okay, so you have external factors, but it has to be massive, like millions and billions, not thousands and $100 and $200. I cannot move Bitcoin. There is no way I can move Bitcoin, right? But if it's like 10,000 people of us at the same time trying to do at the same price, at the same level as time and price, we're going to do the same action by, we can manipulate a little bit the market, but just a little bit. So, and this is how you do level by level, and this is how you do, like, you find the key levels. You can find the key levels in any time frame. Depends the style that you have when you're trading. Are you a scalper? Are you a intraday trader? Are you a day trader? Are you a swing trader? Are you a weekly trader? Are you, investor? Investor means I want to go at the very bottom of the market, the very beginning of the bull market until the very end of the bull market. That must be, that might take 2 years. He's not trading in and out. He just goes in once and then he gets out 2 years later. He's an investor, right? He doesn't care, what's happening every day. He's not using leverage. He just goes to, I don't know, maybe it's Solana and say, hey, here's 10,000. I'm going to buy 10,000 worth of dollars in Solana. Boom. When Solana was $8 or $9 or $10. Where is Solana today? 153, right? A year later or 2 years later, Solana is 153. So he started it with what? $10, right? And today, if let's go even to $200. So when Solana goes to $200, he decides to sell. How much did he make? Right? So he made a 20x, right? 20x, it means he took the 10K and did what? $200K in 2 years. Without the pressure of the day trading, without leverage, without risking, it's just time consuming. But in 2 years, he just turned 10,000 into 200,000 in 2 years. It's something big. Why I say that? Because majority of us, all of us, like you and I and stuff like that, all the people here, what do we usually do? We work 9 to 5. I even see there are some cameras here. I see people going to work now. Mr. Roon here is working. Look at that. He's at work right now. Okay. What we usually do, we exchange. I don't want to say spend or waste, but we exchange our time for us to get money, right? And then we take the money for us to pay rent, to pay food, to pay our clothes, bills. So your money, instead of going up, is going down. You're getting paid by the end of the month, and the bank account, it looks nice. You just got paid, right? But by the end of the next month, your money goes down. Why? Because you need to pay all the bills, right? You have expenses. I'm not saying that you're spending money. I'm saying that you have expenses, right? So that means that your money goes down. By doing investment, you're doing the opposite. You're making your money work for you and you're creating more money. So this is how you should treat your life. And your TA, you need to make sure that you find a way to make your money work. It doesn't matter how much it is. Is it $50? Make them $100. It's good, because so far every day what we do, we need to spend that $50 because we need to pay bills, and we got it to zero. Sorry about that, guys. Small break. So, yeah, I mean, always, we need to have a way to make money by using your own money to put it into work to create more money. Now, I'm not going to say to you that you're going to become a millionaire by one night, or you can become a millionaire in a month or in a year. That is going to be a lie. But what I'm saying is, if you can have a progress and you start with £100 or $100 or 100, whatever your currency is, 100 euros, and you're trying to make it 200 euros or 300 euros in a week or in a month, that is a big success. And you fight in the system, because so far the system has trained us for us to go make money and then give that money back because we need to pay bills. I don't want to go very deeply into this, but it makes me angry, because we came to this world and we need to pay money for us to have a house to live. Really now? Do I really have to pay for a house for me to stay on the planet Earth? Really now? Do I really have to pay for the food? I mean, I know back of the days, the old days, you need to hand. You need to put in the effort. Okay, somebody else is doing the effort, so you're paying. I understand that. I can exchange his time with my time. I don't want to go hand. Okay, fine, good. That's an option. You choose not to hand. But do you really need to pay for you to survive? Do you really need to pay for you to drink water? You need water to survive. So what if you don't have money, you don't drink water, you die? What is this? Come on. I mean, so yeah, I mean, all this, it makes me angry that we came to this, we're supposed to be smart civilization, right? We're humans, we're smart. It has nothing to do with civilization. It's like we're humans, we're smart, right? We build all this stuff. Animals don't build anything, right? So we're not animals. Well, we are animals, by the way, but we're not smart. We're silly. We're stupid in the end of the day, because they managed to find a system to manipulate us, to waste our time, to use us with money for me to survive. I mean, really? No. You want to call it matrix, you want to call it system, you want to call it whatever you want to call it, is BS, right? It's really, that's not, I mean, no. And, we keep on paying money. You're getting paid, you're getting taxed. You're going to buy something, you're going to pay tax, right? In the end of the year, you're going to have extra income tax. If you own anything, then you have ownership tax. You drive a car, you have to pay tax for it. Everything is taxed. You pay money on your income, and you're getting taxed as well on your outcome. I mean, on your spending. I mean, come on. This is, truly manipulation, right? So, so I need to escape from the system, and I'll find a way. This is a way, and this is what I'm showing to you. This is a way for you to escape that system as well. Trying to find a mechanism that you're going to put your money to create more money, so you don't need to work. If that makes sense. No, when you die, they tax you as well. Listen, for you to get buried, you need to pay them. You are dead, but you still have to pay. I mean, how ironic that is. You know, you're dead, but they still want money from you. Just die, for God's sake. Yeah, no, I mean, you know, no, we need to find a way to escape, guys. And this is one way of doing it. Okay, this is one way of doing it. Okay, I'm just reading down the messages. You leave your money to family tax. Yeah, of course. You need to give a reason to the government why you're leaving the money to your family, and they get taxed. So yeah, I mean, they have these magnificent mechanism to take money from you. So we need to turn the tables around. Okay, we need to turn the tables around. We need to find a way how to us to make money. Okay, it's simple as that. It's simple as that. We need to see our future. Okay. So that is about, you know, finding the levels, the price action. You see, I didn't use any indicators. I didn't use the news, the tweeters. I just, you know, treat that price action. And also, you know, what's the direction? The direction is up, right? This is a kind of retest. It's fine, but still enough. I mean, look at that. For how long it's going up? It's going up and up and up for days, right? So for you to have a correction, it's fine because the market moves in a zigzag pattern. It goes up, it's doing a correction, then it goes up, and then another correction, and then it goes up. So is this, you know, a correction? Very, very likely, very possible. This is, you know, that kind of moment. Okay, so you don't panic. You see the levels and see, okay, this is an uptrend, this is a low, this is a high low, high low, high low, high low, high low. All my lows are getting high and high. What my highs? High, 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 high. That's a high, high. So everything goes high. Now we had a little bit of weakness, right? That's what I said. You know, on the daily update, I do a daily update. I post it on the school. You're more than welcome to follow it. I'm trying to do my best. I'm going to do it every day, Monday to Friday. So we saw a range, a weakness. Let me do a more clean range. So that was a weakness, right? And you broke it and it's going down, okay? Short-term traders, scalpers, intertrade, they're going to short it until when? Until they find a key level, right? They're going to find another level. That was another range, right? That was the bottom, hit top, came back, top, came back, top, resistance, then you break it, okay? So that's technical range. Now we are back within that range, okay? So let me mark it with rectangle. So here's your range. Here to there, it's a range. So what are you going to do? You need to investigate that range. Then there's another range down here. Small one, but it's a range. So here's your range. Here's your levels. So either Bitcoin is going to reverse from here, it's going to continue from here, right? Or it's going to come a bit lower, and then maybe it's going to turn around from here. If not, then there's another range down here. So you just keep on finding the ranges. In some point, it's going to turn around. When you're going to see that it's going to turn around and break, this is where you're going to say, okay, this is time now to leave. Right? Leave and go higher. Leave the shorts and start going into longs. And then, you know, when that happens, it will be that area. That is time for you to go up now. Right? So, step by step, level by level, and you just watch the sessions, like, you know, where is the European session, where is the Asian session, and stuff like that. Now, if you don't know how to find these, let me give you an idea. Let's see how that's doing. Is that video doing okay? Only 2 views? Oh, that's all right. Everybody's busy. Okay, let's have a look. Crypto, let's have a look on CryptoCraft. Let me see if the other guy paid the domain. I have another, not for, no, he didn't pay it. Okay, it's not paid. It's under maintenance, fine. Now, this is CryptoCraft, right? I'm gonna post that link to you on the chat. Here it is, CryptoCraft. Use it, save it. This is the financial calendar. Anything that happens, it can affect Bitcoin, right? The crypto space. This is Tuesday, and it's telling you that in Canada, they have the CPI. The color is yellow, low impact. If you pause your mouse on the color, it's going to tell you it's a low impact. So it doesn't play a significant role. US core retail sale. Put your mouse on the orange and it says medium impact. It may impact a little bit of Bitcoin, but not something drastic. If you see a red one, it's a high impact expected. It means, you know, that time, my local time, 7:30, it may create some volatility. So let me check. 7:30 last night, what happened? 7:30, it was around here. So here we are. 7:30, it was around here. Nothing major, just a little bit push up and down. But after that it was done, boom, Asia pushed the whole thing up, right? That was USA. Nothing happened. That was Asia. Okay, Asia pushed it up. Now go back to the website. Another little trick, if you go further down to the very bottom, you have sessions. And it's telling you on your current local time in which session you are, right? Now the blue is telling me that we got another 8 minutes to finish the Asia session. Asia session will close in 8 minutes. European session is already open since this morning, right? And it has another 7 hours to go. And the New York session, which is the American session, is telling me that it begins in 3 hours from now, right? So you can use that website to see whereabouts you are in the session, okay? Which sessions you are. You see all the sessions are overlapping. Asian, Europe, and America, okay? So you can see whereabouts you are. So we are about the end of the Asia, and you know, we're already in the middle of London. So we're gonna see in 3 hours what the America is gonna do. So what do I see here? I see what the observe, so to say. We've seen that the Asians took over the price from the Americans, that they did nothing, sideways. So Asia pushed it all the way up. Now Asia were quite happy with the progress. They took some profits, right? And maybe they're gonna stop here. It's okay. We took some profits, we're going to leave the price here. So now we need to see what the Europeans are going to do. And in 3 hours, we need to see what the US they're going to do. Are they going to push the price up again? Because they're going to see a hype of the, Asia push it all the way up. Or are they going to say, oh, look, yesterday we were here, today it's here, why don't we as well take profits, and they're going to push the price down. And then, Americans will bring the price exactly where it was yesterday when they closed. That is a possible scenario. Or the Americans will say they're going to see themselves as heroes and say, hi, we're here to save Bitcoin. We're going to push Bitcoin further up. They can do that as well. So what are you going to do? Observe the range. Treat the bottom of the range as resistance. Treat the top of the range as, a rejection point, yes, as a support. And treat the top of the range as rejection again as resistance. So here's your resistance and here's your support. If it breaks the resistance, the fight is on, right? Ring the bell and the fight is on. And you just go higher. So now you see is reacting to the bottom of the range. It's giving you some good signs, but you're not going to jump on your guns yet, right? You need to see that you're going to break the resistance and you want to see the price go above, okay? You want to see something like this. That's what you want to see for you to say, okay, that correction is done. From here to there, it was the correction period. But for you to see that, you need to break above the range and head up. Okay, this is how simple you can do TA level by level, key levels, without indicators, without moving away from your chart. We only use one chart, multiple time frames, and you just observe the price action. Simple. Daryl asks, do you use the Fib tool to determine the pullback or TP points? Yes and no. Yes and no. I don't go crazy with Fibonacci as with the Fibonacci sequence, which I do believe it's one of the magical tools, right? I love Fibonacci, truly, but I don't rely on it. But it's a very, very useful tool. Now, speaking of which, for you to use the Fibonacci tools, you need to know few rules. You need to have conditions. When do you apply a Fibonacci? Only when you have a trend, right? You cannot apply a Fibonacci on a range. When price action is doing a range for a very long time, you cannot put the Fibonacci inside the range, okay? It doesn't work. So, condition number one, or criteria, so to say. What's the criteria for you to use? What kind of criteria you need for you to use the Fibonacci? You cannot use the Fibonacci for these price action, but you can use the Fibonacci for the price up. So you can say, okay, that was a sideways, it broke from here and went up to there. So you need a trend, okay? Not a sideways action, you need a trend. That's the first condition. The second condition, you need to find a wave that is complete, a trend that is complete. Now, price action goes up, retest, goes up, retest, goes up, retest, goes up. What's that? An uptrend, right? All these impulse move is an uptrend. As that progresses and goes, can you draw the Fibonacci from here to there? Let me bring my Fibonacci. Here's my Fibonacci. Can you do that? No, you cannot, right? You need to find the swing low and the swing high. What does it mean? It means you need to find the very bottom of the wave to the very top of the wave. But the wave, for you to know that it's the very top, it needs to break its uptrend, right? So you need to see a reversal. Once you see a reversal happening, a correction, if you want to call it that way, if that happens and then you determine that it's reversing and that uptrend is finished, then you can determine, you can classify this as a swing high. And now that uptrend is over, you have a starting point and a finish point on your Fibonacci when you have a reversal. So, speaking of which, let's go and have a look at this example here. Do we have an uptrend? Yes, we have a very strong uptrend. Good. Is this a swing high? Yes. Why? Because we have a reversal. You see the price action was going up, going up, going up. Now it had a deep correction. Look at that. These are very tiny, small corrections, right? Very tiny, small corrections. What about this one? That's a big one, right? It's way greater than these ones. So that is a reversal. That's a small correction on its way up. That is a big correction, a reversal. So can I treat, let's say, that trend for that very bottom, you see sideways, you don't calculate that, the very bottom of that range to the very top, can I use that? Yes, you can. Now you can. You met the criteria. So let's say this is the beginning of the trend and this is the very top of the trend. So criteria number 2, you need to make sure that the impulse is done, okay? Criteria number 3, you need to draw the Fibonacci the same direction of the trend. If that an uptrend, you start from the bottom to the top, okay? So you mark the last trend. Despite that it's going down, you don't care about that. That is ongoing, on process, You don't use that at all. You use the last uptrend. So here's your levels, right? That was the last range. You start moving, you break it, you move. Okay, so here's your move. Here's your Fibonacci. Here's your 24. Here's your 38. Here's your 50. 50 now, remember, is a very significant level, and it happens to be within the range. That's good. Then we have another range, another level, remember, another range, which sits exactly on the top of my golden zone. Now, is Fibonacci a magical tool, right? Why do we call it a golden zone? Why is so important? Okay, all levels are important, but people go bananas with the golden zone or golden pocket. Different names again. Don't get confused. Now, it's nothing magical. What happened is people that they're using the Fibonacci tools, they have one rule. They take action when the price action is going to reach the golden zone. So the golden zone is kind of the mark area that it approaches, right? It approaches a significant area that everyone is watching. So it's like you're having a line and you have the athletes right here on the same line, right? Ready to go, right? So what are they doing? They're getting ready. So price action comes down. What the traders are doing, they're getting ready. All right, comes down, comes down, comes down. When it hits the 618, guess what happens? Bang, all right? The gun goes off. And what happens? The athletes start at the same time, all of them moving. So this is what happens. Everybody is watching the 618 and the golden zone, and then everybody decides to jump in. Here we are. We reach the 618. We're going in. This is the golden zone, and this is the best place for me to enter. And that's why majority of the times, not all the time, majority of the times, that's why you see price action turning around on the golden zone, because it's a psychological matter. Everybody is waiting on the line. Either they're waiting for the green line or they're waiting for the bang from the gun to start running. This is what Fibonacci is doing. It's making all the traders to wait on a specific level. When the price action is gonna reach that level, everybody jumps in, and that is the trick behind it. Now, how do you know how many people are gonna be waiting? How many athletes do you have? Is it you on your own? Or do you have 3, 5, 8, 10, a million? You don't know. Okay? You don't know. You never know. And sometimes you see price action reacting, people reacting on the 38%. Okay? Right. That is about the Fibonacci. So now you know. You need to use it on a trend line. Okay? Second one, you need to make sure that the impulse, the uptrend, is doing a formal correction. So you need to identify the swing high, okay? And you draw the Fibonacci on the same direction of the trend, not on the range. That is done. You don't want to use that range. You want to use outside of the range. You can use that one. It's fine. And here we are on the 38 right now. Here's your 50. Here's your golden zone. The top of the golden zone and the bottom of the golden zone. So here's the golden zone. And you just, wait and see how it goes. Okay? That's about the Fibonacci. What else? We already done 2 hours today. 2 hours and 2 minutes. Let me see. Let me talk about Stochastic RSI. Let's bring Stochastic RSI. Do I have, nope, that's the, yep, I have the Stochastic RSI. Here's the Stochastic RSI. Now, Stochastic RSI, what is the Stochastic RSI? The Stochastic RSI is an indicator, obviously. It's a lagging indicator. What it means that it runs behind the price action. Price action is real time. Indicator is a lagging indicator. It means it's a little bit behind because why? What's the reason behind it? Because it has to do some calculations, right? And what's the calculations? It needs to calculate 13 periods back. So this is the 15-minute, right? So for the stochastic RSI to give me, so to say, let me clear this out a little bit for you. Let me minimize that, trying to increase here. Here we are. And let's improve the price action chart here. Okay. So what the indicator is telling you, for this value, it needs to calculate the previous 14 periods. Okay, 14 periods. So it needs to go back and calculate the last 14 candles. So I am on the 15-minute, so it has to go 14 candles back. It calculates all these candles, and the value that it found, it gives me that printout. Okay, here we are. We've got Bitcoin now reacting to the bottom of the range and is trying to get out. Will this succeed? We'll wait, right? Why I'm waiting and not panicking, not FOMO in? Because I need to see a break of the range, a retest of the range, and continuation. If I see that, then I know this correction is done, okay? So far, I just get the early sign of the breakout. Is it a breakout or is it a fake out? We need to see. Wait, don't panic, okay? Read the wick. Here's a nice opportunity. Read the wick. What does it tell you? Good pressure or buying pressure. Any wicks above? No. Bodies? Medium. Do we have wicks below? Yeah, they keep on buying, they keep on pushing, right? Then we need to see how far they can go. Then it has to come back and retest. Is this resistance gonna break and act as a support? That's what I want. I want to see the price action break the resistance, come back and make sure that I stay above. If I stay above, then I'll find another range and I'll pay attention in this area. Because I have my first condition ticked. I broke the range. I broke resistance. Now my resistance is support. And then you're looking for the second signal that it's going to break the new range, break out and say, okay, that's it, I'm done, I'm going. Okay. So stochastic RSI, it's a momentum indicator. It's telling you the momentum, how strong the move is going to be. Tayana, thank you. Tayana, is that right? Did I say that right? I apologize if I killed it. So yeah. So the recording is going to be on YouTube. I store all the videos on YouTube, and then I'm going to post a link into the school so you can see it. Okay. So the stochastic RSI is a momentum indicator. So it's telling you, when it's very low, right? It's very slow. When it's picking up speed, and the higher it goes, the stronger it gets, right? Then it's also a directional indicator. So if you see stochastic RSI going down, price action is going down. If the stochastic RSI is going up, the price action is going up. Okay, so it's a directional indicator. Okay, and also it's measuring the momentum, right? The volatility, so to say. Momentum is the correct term, not volatility. It's giving you the momentum. So it's picking up momentum to the up. It's going up, going up, going up. Now, we have some lines here, which is marked on the 80. Usually when you open the stochastic RSI, you're going to see 80 and 20. I tweak them and I push these lines to 90 and 10. How you do that? Go to settings, go to style, and you change the numbers. The upper band instead of 80 is 90, and the lower band instead of 20, I make them 10. I make the lane a bit wider. Okay, I use a little bit the extreme side. A lot of people have the false understanding that when the stochastic RSI is going to break above the 80 or 90, which we call it the overbought area, they start selling. And I want to make clear and give you the tip. This is not the right time for you to sell. Okay? For you to read this correctly, you need to understand that it's building up momentum, right? It's building up, building up, building up. So if that is heading up, you have your car on high speed, full speed. You have your gas pedal to the floor. Is it the right decision for you to open the door and get out? Can you make the lines brighter for the stochastic? Yeah, I can make it a bit brighter, no worries. Here we are. I'll make them a bit thicker. Will that do the trick? I'll make it solid lines for you. I can make it solid lines. Here it is. Okay.
Yeah, perfect, mate. Cheers.
All right, cool. So here are the lines, okay? So when it's going above this line, is it smart for us to start thinking short in the market? No, okay? This is not the trigger for you to say, okay, this is the time for us to exit. No. The true trigger for you to start thinking to get out, is when these two lines are crossing over. So you have the yellow going up, silver following behind. It's this fast line, fast and slow line. Okay? So you have the fast line going up, you have the slow line going up. In some point, the fast line is going to turn around and the slow line will start catching up, and then later it's going to turn around. So what you're going to have? A cross. Right? The fast line is turning, the slow line will turn later. So when you get the cross, this is the time to say, oh, something is changing. It means what? It's losing momentum, right? It was pushing to the up. It broke above in this area. It broke, let me see where it broke the line. It broke the line around in this area. So it broke the red line when the price was here. So was it smart for you to get out here and go short? No, look what the price did. It went even further up. So it is not smart for you to get out because it broke the line. We don't care. We pay attention to it, we monitor it, but we don't take action because of it. Our action is when we see a cross. When you see a cross down, this is the moment that is telling you we're losing momentum, right? It dies down, right? You're losing the speed. And then when you see the indicator telling you we're going down, then you see price action is going down, right? And this is where you hit rock bottom. So when the indicator is heading upwards, it means full speed to the up, okay? When it starts crossing, okay, this is the time that you know that it is losing momentum to the upside, and then there's the possibility are high to go the other way around. Now, it's the same thing to the top and the same thing to the zero. I'll tell you what, the indicator, the very bottom of the indicator is 0 and the very top of the indicator is 100. It cannot go higher than 100, it cannot go lower than 0. So what happens, oftentimes, you can see that the RSI is going up and then it goes flat. Why? Because it cannot print 101. It got stuck to 100, okay? And the slow comes up, picking up, catching up, and then that goes flat. Is it the right time for you to sell? No. Why? Because you just got your foot on the gas pedal on the floor and your revs, right? Here's your revs. 1, 2, 3, 4, 5, 6, 7. You have a very fast car, very fast engine. 8,000 revs, right? So your needle is stuck to 8,000 revs. This is when RSI is going to be on the 100%. Is it the right time for you to open the door and jump out? If you want to commit suicide, maybe, right? So when you see stochastic RSI stuck on 100, it means the price is going to push and push and push and push. And the momentum is so high that you're going to see big candles. Okay? If you see from 100 dropping 99, 98, and then you see a cross, then you understand that the revs are dropping, right? So what are you doing? You losing speed. It's going down, 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 right? So you start dropping, okay? When stochastic RSI hits the zero, RSI comes down and then hits zero, it goes flat again. Is it the right time for you to buy? Do you think that this is the end of the down move? No. Let me clear this noise here. Nice and clean. So if here is the moment that I hit zero. Boom. Look what happened to the price. Indicator, I'll give you the advantage. Indicator broke zero, hit zero when price was here. Look what happened to the price. It went even further down. Do you see this? This is where the cross point happened. This is where RSI hit zero. Here it is. Let me change the color. Make it solid again. There it is. So here we are, zero. This is the moment that it hit zero. Even before that, the fast line hit zero here. Right? Even worse. Is it the right time to start buying because you saw stochastic RSI in zero? No. Look how much price went further down. It went further down by 3.3% on the Bitcoin. Okay? So, when stochastic RSI reaches top 100 or bottom zero, it is not the right time for you to take action. For you to take action is when and only you get a cross up. And this is the time it's telling you that, we're picking up again. So where did it cross? Here. This is where we had the cross. It went a little bit lower. That's the deviation. That's the divergence. It's all right. Always remember the indicator is going to win. And now it's pushing to the up. Okay. Now again, it's approaching the 90. Okay. Now, another misconception. Look how big that is. It has a long way to go for the price. That is not accurate. Okay. You may have RSI move by 20 units, and you may have candles move like gold candles. You may have stochastic RSI move all the way from 0 to 100, and the price action may move only that much. So these two don't go together. It doesn't mean that it goes very rapidly up. It doesn't mean that it's going to give you big candles, okay? But it's telling you about the momentum and the direction. Are we clear about this? Right? Are we clear about this? Are we clear that stochastic RSI is a momentum indicator and a directional indicator? Now, stochastic RSI, the higher it goes, the more momentum. So it's picking up speed. So that was dropping. It stopped it. 0 miles, 5 miles, 10 miles, 20 miles. It's going to pick up. It needs some time to expand momentum. Okay? Time for you to take action only when you have a crossing. Okay? And a third good tip for you for the stochastic RSI, the higher the time frame, the better it is. Okay? It has less noise. So which time frame I'm using? I'm using the 12 hours to see the stochastic RSI, what is happening. Okay? Look at that. Let's compare stochastic RSI on the 12 hour. Okay? Push to the up, it was pushing up. Cross down, it went all the way down. And then another cross up and start pushing to the up. Then it came here, pushed down a little bit, small correction, and push one more time. That's why you got to push. Now, again, it's coming down. Okay? So in overall, Stochastic RSI on a higher time frame, the more higher time frame you see it, the better it is. Okay. Now, stochastic RSI, another little tip. Okay. For you need to know when you should rely on the stochastic RSI. Stochastic RSI, the higher the time frame, the better it is. It has less noise, less mistakes. Weekly. Look at the weekly. Right? Stochastic RSI on the weekly, which is super high time frame for the stochastic RSI. Look at that. Cross down. What do you have? A down push. Right? Now what do you have? A W formation, a cross up. Okay? So in overall, on the weekly time frame, we know that we're going to push up higher and higher, but it's going to take days and weeks for that to reach the top. Weeks. Okay? Why? Because this is a weekly time frame indicator. So that may take a month or 2 months to get up there. We see how fast we'll go. Okay? So on the weekly time frame, you can understand this is a little bit of swing time frame. And if you pay attention on the weekly, then you know when to get in and when to get out. Is that wonderful? Range, stochastic RSI cross up on the weekly, push to the up. It reached the top, cross down, weakness, going down and dropping. It hit rock bottom, cross up. What's this? Push to the up. So for the next few weeks, maybe months, we're going to push to the up. Why? Because the weekly stochastic RSI is telling me so. Okay? So that's a big tip about stochastic RSI. The higher time frame, the better it is, less mistakes. The lower the time frame, even the 12 hours, it's more, is reading the past 13, 12-hour candles. So it's giving you that information. So it's telling you, as a 12-hour, we overextended, right? So that's why you've got it crossed down, and that's why you have a gray candle. It's correcting, okay? It's correcting. Now, how far will it go? You don't know. But now we know that we are in the correction phase on the 12-hour, okay? It needs couple hours to see what's the next move is going to happen. It's going to come in the same area as here and turn around. Is it come down to the 50 and turn around, or is it going to go all the way down to 0? We don't know. Okay, we just watch what it's giving you now. Now it's giving you weakness on the 12-hour. What about the 15 minutes? It's pushing up. Okay, now a lot of people get a lot of confusion here. So okay, hold on a minute, Alice. Weekly is telling me it's going up. 12 hours is telling me it's going down. 15 minutes is going up. Which one do I listen? Why is different? Why the one time frame is going up and the other time frame is going lower? That has to do with the frequency. What do I mean? Well, the 15 minutes, let me break that down to more simple. A day, right, has 24 hours. So it's a breakdown, right? So one day has 24 hours, right? Now 24 hours, right? Or let's talk about 1 hour. 1 hour has what? 60 minutes, okay? So it's a breakdown. So 1 hour has 60 minutes, right? So 1 hour has 4 quarters, which means 4 15-minute candles equals to 1 hour candle. Does that make sense? It's a breakdown, okay? So the daily cycle frequency is a very slow one, okay? 24 hours to do one rotation. But if you look on the hours, it needs to do 24, well, if you see the minutes, so to say, it has to do more rotations, right? If you look on the seconds, it has to do thousands of rotations per day. Does that make sense? Okay. So it's the same thing with the indicators as well. So if the indicator, to start from top to bottom, it takes weeks on a weekly time frame. The daily indicator is going to be more faster, right? It's the frequency. And if I was looking on the 50 minutes, it's going to be like this, more frequent. And it's the same principle with the candles. You have one daily candle. Let me do a demonstration about that one. Let's mark. Let me get rid of that. Let's come here. Let's do a mark of. Let's go down to 15 minutes. Okay. And let's mark a previous day, way back, just to have a nice clean chart. So can I have a 3 o'clock in the morning? That's the 3 o'clock in the morning. That's the 3 o'clock in the morning. Okay, 3. Let me go further back to have a nice clean chart. Okay, 3 o'clock. Here we are. 3 o'clock. It's UTC 0. It's the beginning of the day. So I mark this as my open, right? Now I need to find, that is Sunday, 3 o'clock. So I need to find Monday, 3 o'clock. Where's Monday, 3 o'clock? Sunday. Monday, 3 o'clock, it's here. So the next 3 o'clock candle is here, right? So you see these two yellow lines? I mark the beginning of the day and the end of the day. So all these candles, if I compress them, I should get a daily candle like this. Right, so let me mark this as orange. Let me make it a bit more brighter. So here's my daily candle. Let me check a little bit if I have a wick. So it started from here, it went higher, so no wick below, and then it went all the way up there. So I have a wick from here all the way to this level there. Right, so it went all the way up there. So I'll do that yellow as well. Let me give that color and do that orange. Here we are. This is my daily candle. If I switch now to the daily time frame, between these two lines, I shall see that kind of candle. Pay attention. What candle did I have? Let me mark away. Is this a body with a wick? Let me go back to 15 minutes. Let me make that a bit thicker. And let me bring that wick to the right. That's the highest point. Here it is. So that is my daily candle. My prediction, not my prediction, how I observe the candles, how the price action moved. This is my daily candle. That's the shape of my daily candle. If I shift to my D1D, is my candle the same with a daily one? So I broke down. You see, here's my daily candle. I'll move my, okay, it doesn't move. Here it is. So that's my candle that I designed with a wick. And this is a daily candle between the two yellow lines. So this is the daily candle, and this is all the price action, all the 15-minute candles within that one day. So that is a breakdown. Exactly the same thing happens with the indicators. You see how many times within one day, how many times the price went up and down, went up, went down, went up, went down, up, down, up, down, up, down, multiple times, up, down, then up to these levels, then we went higher. That's why it created me the wick, went all the way up and then came back down. So if you know how to read the candles on an internal structure, this is the 15-minute candle within the one day. So this is internal structure, and that's my external. This is my daily. This is the 15. Does that make sense? All right. Put it back to the daily, and you see that I have exactly the same candle. That's my daily candle. Here it is. Sunday, the 14th of July. It's exactly how I draw it. Why? Because I understand how the charts are moving. Let me give you another. Here we are. Here it is. So this is a chart on a weekly time frame. I picked that weekly candle and I broke it down. And this is all the 7 daily candles within 1 week. So this is the weekly candle. I put it here, so how it is. And this is the breakdown. That was the open, that was the lowest point, that was the close, and that was the highest point. And that's it. Monday candle, Tuesday candle, Wednesday candle, Thursday, Friday, Saturday, Sunday. Okay. This is 1 weekly candle, 1 second candle. This is 7 daily candles all together create that weekly candle. And this is how price action moved. It came down, you open here, it came down, it created that low, and then it got pushed up, came down a little bit, pushed up, came down a little bit, pushed up, came down, up, down, and it closed here. That was the track, so to say. This is how the price action moved. These are the daily candles, but if you compact all of them, squash them, this is what you get. This is your weekly candle. Right? Does that make sense? I hope so. Right, good. So the same thing happens, exactly the same principle happens with the indicators. So a high time frame indicator is going to be slower, and if you go to a smaller time frame, then you have faster indicators. So when the slow one takes time to get to the top, the fast one, a smaller time frame, it goes like this, goes like crazy. All right, it got multiple times until it goes up and down. Okay, it's the frequency of time. That's what it is. Now, what do we have here? I mean, this is again 1 hour, go to 15 minutes. What do we have here? We have the break of the range, and everybody is selling the range. Why? Because most likely people are trading the range. They saw this opportunity and said, hey, that's a nice range, let's push it, goes up. It broke a little bit of the range, and then they said, okay, fair enough, enough is enough, I'm closing the trade. So these are scalpers, right? Not a big deal. What do you see? Selling, pressure. You got the haha moment. That's good, like it, love it. All right. So now what we want to see, right, that the price action stays above the range. And because the bodies are too small, I kind of doubt it, right? I prefer to see something like this, breaking out clearly, come down and have a good distance, and then, it's going to bounce like this, right? That's what I would expect. Now, to be so close to the range, it means that we did not have that much pressure. Buying power, it wasn't that good enough to push the whole thing up. It just went all up here everybody starts selling, scalpers start selling, and already, Bitcoin is dropping. So maybe it's going to do something like this, maybe, and then come back, maybe. We'll see. Okay, we'll see. It's too close to the range. But never lose hope. Never lose hope. We just need to wait and see. If scalpers get out now, right? If scalpers get out now, maybe the big traders, the swing traders, and the word traders will say, "Oh, we broke range. Let's increase it. Let's support this action. Let's support this breakout." We'll see. You never know what's going to happen. So yeah, the aha moment. That's a good one. That's why we do these sessions, for you to get the aha. So it depends which time frame you're looking. You need to watch the indicators. It's going to be good enough for you, right? But you cannot make a big decision on the 15-minute and for you to be a swing trader, right? Swing trader, 15-minute is not a bit too good for you. It's going to be too noisy, right? The indicators go up and down multiple times. You don't know which one's going to be the bottom, right? But if you're a swing trader, you come to the weekly and say, "Oh, we are the bottom." We start picking up. Okay, this is the right time. So it depends the style. You need to have your own time frame. If you day trader, intratrader, and you want to see, pick up momentum and some volume and stuff like that, that is the right thing for you to do. Another little tip from the experienced trader. When you have an uptrend, so the price action is going up, every time you have a cross up on the Stochastic RSI, the up moves, they're going to be strong on the cross up. On uptrend, the bodies, when you have a cross up and telling you that we're going up, you're going to have big bodies to the up, right? On its way down, the bigger moves, they're going to happen when you're going to have what? A cross down. When you have a cross down, the down moves, the down bodies, the down candles, they're going to be stronger. Okay, that's another little tip from me to you as a present, that when you see a cross up on a down move, expect small bodies, short move to the up. When you get another cross down and it's a downtrend, expect bigger moves to the down when you get a cross down. So here is a little insight from my own strategy, which I'm going to share my strategy later in time with you guys. I have my own strategy. I have my own way of trading. And the strategy that I'm using is to make things as simple as possible and to help new traders. You need to find the direction. Once you find the direction, then you need to see which area you're going to pay more attention. Are you going to pay more attention to cross-ups, or are you going to pay attention to cross-downs? That depends on the direction. If it's a down trend on the price action, pay attention more to cross-downs. If it's an up, pay more attention to cross-ups. That will save you a lot of pain. Okay? Anyway, on Bitcoin, I'm not trading Bitcoin on the 15-minute. We're using the 15-minute to see the charts. I'm very bullish on Bitcoin. I have open trades that are longs. Okay, so I'm still waiting for the long run to hit the red line at some point and the top of the range at some point. Okay. Right. Okay. We just passed the 2 hours and a half mark. I think it's enough for today. I don't want to burn you completely. I don't want to fry your brain. We spoke about price action, key levels. We spoke about how to watch the ranges. We spoke about how to use the Fibonacci, Stochastic RSI. We made it clear about the Stochastic RSI. So, time went a bit too quickly. Yeah, I know it happens. When you find something interesting and you have a good time, then time flies. Exactly, time flies when you have fun. You're more than welcome, everyone. I don't usually keep these videos as short. You know, I usually do 3, 4 hours, 5 hours. My record is 8 hours. But, you know, I promise to do these short videos so you have a chance for you to see them, right? There's no point for you to have 8 hours for you to watch. So we're going to do these again next Tuesday. Give me a few hours because Zoom will need some time to release the video to me because it's 2 hours and 40 minutes long. So give me a few hours. When I get the video ready from Zoom, I'm going to post it on YouTube so you can see it. Okay, over and over again. And for your fellow students, classmates, let them know that we've done a video. If you find this information useful, you know, come back next Tuesday. Right, lovely to see you all, and lovely to meet you, the new guys. Lovely to see the people that I know. Thank you, Mollerman. Thank you, Jane. This is quite basic to intermediate. I just want to give you a clear understanding how to use the tools, how to use the price action. And I promise you better days are coming. We're quite bullish. We're still bullish on Bitcoin. Okay, that was a small correction. It found a range. It broke out the range. Let's see how far we'll go, and take it level by level, guys. Right? Don't panic. Don't listen to anyone. Just practice on the price action on the chart, and you're gonna do much better day by day. So I shall see you all soon again next Tuesday. If you need anything in the school, you have any questions and you need any explanations, tag me. How you tag me? You put the @ on the post, you know, on Discord, you put an @ on front of my name. Okay, just put @ on the front, like this one, and then you just type freedom, and it's gonna come up, right? @freedom, one word, and you're gonna see me. You're more than welcome. I shall see you all next Tuesday. Take care. I tried to find the previous one. Where can you find the Mafia Peep? The Mafia Peep on the next lesson. The previous lesson did not get recorded because of technical issues. I don't know why. Don't ask me. Go figure what happened with Zoom. I have an idea what happened. I got mixed up with the accounts. That's it. But in general, we're all good. All the lessons are going to be recorded. The Mafia Peep or the Olympic Peep or the Gangster Peep, that's the same thing. Is a breakdown to find key levels the easiest way. It's like a shortcut. I'll just show you today the manual way how to do it. Once you get good at it, then we can go to shortcuts, right? There's no point to give you the shortcuts if you don't know how that is printing you the lines. So we need to know how to find the lines all ourselves. Okay, ladies and gentlemen, thank you very much. I shall see you next Tuesday. If you need anything, tag me and everything is going to be okay. All right, don't panic. Everything's going to be okay. Be safe, trade safe, and book your markets. Right, all the markets, you know, book them. All the profits, book them. Whatever the market's going to give you, book them. Right, take care. I'll see you soon.
Cheers, Styles. Take care, mate.
Thanks, man. Nice to hear you.
No worries, mate.
Appreciate you. Cheers, mate. Take care.
Cheers. Thank you.
See you,
Have a good
bye.
one, guys.